Price expands wide, but it cannot leave the box. The session forms across old memory. May 10th Asia session forms between May 7th U.S. session midpoint and May 6th U.S. session upper boundary. It expands wide. It overlaps several session memories. It does not form in a small clean space. It stretches across old levels. That matters. When a session forms wide like this, the top and bottom become dangerous. The middle can trap both sides. The upper side can reject late longs. The lower side can catch late shorts. So we do not chase the first direction. We wait for the boundary. May 10th Asia session first moves inside its own wide session box. Price tests. May 6th U.S. session upper boundary. It reaches high. It tries to continue, but it cannot move away cleanly. Distance becomes shorter. Reaction comes faster. The upper move starts to stall. Then price rotates back. It tests May 7th U.S. session midpoint. It moves between old memories. But the important point remains simple. Even after testing the upper side and the middle memory, price stays inside May 10th Asia session box. The session does not give clean escape. It gives rotation. It gives pressure. It gives two-sided execution. First setup. Short entry line. May 10th Asia session upper boundary. Stop loss line. January 30th U.S. session lower boundary. Take profit line. May 7th U.S. session upper boundary. Trailing target. May 10th Asia session lower boundary. Risk-reward ratio 2.72. The short starts at May 10th Asia session upper boundary. Why there? Because price already expanded inside a wide Asia session box. The upper boundary becomes the line where buyers must prove continuation. If price breaks above that upper boundary and holds distance, short is wrong. If price reaches the upper boundary and cannot stay above it, late long pressure fails. That failure gives the short. The short is not from guessing the top. It comes from the upper side failing to hold. Price reaches. It reacts. It cannot build distance. Then it returns. That is the trade. The stop sits at January 30th U.S. session lower boundary. That may look wide, but the session is wide. The formation is expanded. The trade needs enough room to survive the upper memory test. If the stop sits too close, inside the wide May 10th Asia box, normal rotation can remove the position. Then price can still move to the target after the stop has already been touched. That is not protection. That is comfort. Here, the stop must sit above the failed upper pressure. If price pushes through the upper boundary and reaches the January 30th U.S. lower memory, the short has lost control. The market has reclaimed too much space. The failed top no longer controls the trade, so the stop belongs there. The target sits at May 7th U.S. session upper boundary. Why there? Because after the upper failure, price does not need to collapse immediately to make the short valid. It first returns toward old U.S. memory. May 7th U.S. upper boundary becomes the first realistic destination. That is where profit must be measured. Not at the lowest dream. Not at the deepest possible extension. At the next structural memory. Then the trail can open. Trailing target. May 10th Asia session lower boundary. That lower boundary matters because it sits near weekly 0.5. Now the trade changes. When price reaches weekly 0.5 pressure, you do not treat the short as free. You protect profit. Weekly 0.5 can slow the drop. It can create a strong bounce. It can shorten downside distance. It can make sellers late. So if the short reaches May 10th Asia lower boundary, the trade is already paid. The trail is no longer about being right. It is about protecting earned distance. If price reaches the lower boundary and immediately reacts up, the short should not give back everything. If price holds below and keeps distance, the remaining position can continue. But the lower boundary near weekly 0.5 demands attention. Now, the same level creates the second setup. May 10th Asia lower boundary becomes the long entry line. That is important. The same level can serve different roles at different moments. First, it is a trailing target for the short. Then, after reaction appears, it becomes a long entry. Long entry line. May 10th Asia session lower boundary. Stop loss line. May 7th US session lower boundary. Take profit line. May 10th Asia session midpoint. Trailing target. May 10th Asia session upper boundary. Risk-reward ratio 3.48. The long begins at May 10th Asia lower boundary. Why there? Because price reaches the lower side near weekly 0.5. It tries to continue down. But if it cannot stay lower, the short pressure weakens. Price reaches the bottom. It reacts. It starts to return. That is where the long begins. Not because price is bullish. Not because the candle looks strong. Because downside continuation fails near a major lower memory cluster. The stop sits at May 7th US session lower boundary. That stop protects the long from a real breakdown. If price falls through May 10th Asia lower boundary and continues through May 7th US lower boundary, the weekly 0.5 hold has failed. The long has lost its foundation. That is where the position must leave. The target sits at May 10th Asia session midpoint. The midpoint is the first balanced return. In a wide expanded box, the midpoint matters. Price often returns there before deciding the next side. So the first long target is not the upper boundary. It is the midpoint. That keeps the trade realistic. If price reaches the midpoint and stalls, the long has paid. If price holds the midpoint and keeps distance, the trail can aim for May 10th Asia upper boundary. That upper boundary was the earlier short entry, so the full box becomes usable. Top failure gives short. Bottom failure gives long. Midpoint gives first target. Upper boundary gives trailing target. That is structure. Now manage the trail. When the target moves, the stop must also move, but the stop cannot be too tight. If it sits right behind the candle, normal reaction can touch it. Then the trail damages the trade. If it stays too far behind, the trail protects nothing. The stop must follow structure, not fear, not greed, not the last candle. If the long reaches the midpoint and price keeps holding above it, the stop can move under the new support. If price reaches the midpoint and immediately returns lower, take the profit. Do not force the upper boundary. Partial profit can help. If the first target pays and price begins to stall, a conservative trader protects more first. 60% can be taken first. 40% can remain for the trail. If price holds distance and pullbacks stay shallow, an aggressive trader can leave more open. 40% first, 60% for continuation. For a two-step trail, the same idea continues. A conservative trader can take 50% first, then 30%, then 20%. An aggressive trader can take 20% first, then 30%, then 50%. But the percentage does not create the trade. The structure creates the trade. The percentage only manages pressure. Now the full May 10th Asia structure is clear. The session forms wide. Between May 7th U.S. midpoint and May 6th U.S. upper boundary, price tests the upper side. It cannot leave the box. Short forms at May 10th Asia upper boundary. Stop sits at January 30th U.S. lower boundary. Target sits at May 7th U.S. upper boundary. Trail reaches May 10th Asia lower boundary, near weekly 0.5. Then the bottom reacts. Long forms at May 10th Asia lower boundary. Stop sits at May 7th U.S. lower boundary. Target sits at May 10th Asia midpoint. Trail reaches May 10th Asia upper boundary. Risk-reward ratio 3.48. The day does not reward one direction. It rewards boundary behavior. Top fails. Short pays. Bottom holds. Long builds. Price reaches. It reacts. It holds or fails. Then you execute. Price compresses again, but the long has less room. The session forms inside prior rotation. May 11th U.S. session forms between May 10th Asia session lower boundary and May 10th Asia session midpoint. That area almost matches the zone between May 7th U.S. session midpoint and May 7th U.S. session upper boundary. It compresses by about 50%. It overlaps. It does not open fresh space. It forms inside the prior structure. That matters. When the next U.S. session forms, inside the lower half of the prior Asia box, price is not free. It is still working inside memory. A long can form, but it needs proof. It needs a line. It needs a target. It needs enough reward. May 11th U.S. session first stays inside its own session box. Price rotates. It does not leave cleanly. Bodies remain smaller. Reactions return. The session holds price in the box. Then price starts to lift. It breaks above May 6th U.S. session lower boundary. That break matters. Then price pushes higher. It tests May 10th Asia session upper boundary. Now the structure becomes visible. The U.S. session compressed low. Then it moved back into upper Asia memory. That is a long setup, but not a wide one. The trade has limited space. Long entry line. May 11th U.S. session midpoint. Stop loss line. May 7th U.S. session lower boundary. Take profit line. May 6th U.S. session lower boundary. Trailing target. May 10th Asia session upper boundary. Risk-reward ratio 1.66. The entry sits at May 11th U.S. session midpoint. Why there? Because the session formed compressed between May 10th Asia lower boundary and May 10th Asia midpoint. The midpoint becomes the first line where buyers must hold control. If price stays below the midpoint, the long is weak. If price reclaims the midpoint and moves away, buyers begin to control the compressed U.S. box. That is the long trigger. Not the later breakout, not the upper test. The midpoint hold. Price reaches the midpoint. It reacts. It holds. Then it starts moving away. That is where the long appears. The stop sits at May 7th U.S. session lower boundary. Why there? Because May 11th U.S. session is compressed inside prior memory. If price loses the midpoint and then continues down through May 7th U.S. lower boundary, the long has lost structural support. The lower memory failed. The compressed U.S. hold failed. The trade is no longer valid. So the stop sits under that older support. It gives room, but it also protects the idea. If price reaches there, the long is wrong. Leave. No hope. No delay. The take-profit line sits at May 6th U.S. session lower boundary. That is the first target. Why not target higher immediately? Because the risk-reward is already limited. Price is still inside a larger memory cluster. The first clean target must come from the next nearby structural line. May 6th U.S. lower boundary becomes the first place to get paid. If price reaches that level and stalls, the trade has done enough. If it holds and keeps going, then the trail can extend. Trailing target. May 10th Asia session upper boundary. That upper boundary matters because it was the top of the prior expanded Asia box. It also acted as the earlier short decision area. If price can return there, from May 11th U.S. midpoint, the long has completed a rotation back to the upper side. But the trader must respect the ratio. Risk-reward ratio. 1.66. That number is not high. It does not give much room for poor execution. If entry is late, the ratio weakens. If stop is moved wider, the ratio breaks. If target is too close, the trade does not pay enough. So this long needs clean execution. No chase. No late entry. No emotional hold. The midpoint must hold first. The move must build distance. The first target must be respected. The trail must be earned. Now watch the behavior. Price rotates inside May 11th U.S. session box. It holds the midpoint. It breaks above May 6th U.S. lower boundary. It pushes toward May 10th Asia upper boundary. The move works. But it does not give unlimited space. That is why the first target matters. The trade is valid, but not generous. That is a different type of trade. A 3.48 setup gives more space. A 1.66 setup demands more precision. The trader must know the difference. A lower risk-reward trade can still be taken when the structure is clean, but the execution must be tighter. The size may be smaller. The target must be respected. The stop cannot be widened. Now the trail. If price reaches May 6th U.S. lower boundary and continues to hold above it, the remaining position can trail toward May 10th Asia upper boundary. But the stop must follow. A trail without a stop adjustment is just giving back profit. Move the stop only after price earns distance. Do not pull it too tight. If it sits too close, normal reaction removes the trade. Do not leave it too loose. If it gives back the entire move, the trail has no purpose. The stop must protect earned distance without choking normal movement. That is the balance. Partial profit can help again. If price reaches the first target and stalls, a conservative trader protects more. 60% first, 40% remains. If price holds above the first target and pullbacks stay shallow, an aggressive trader can leave more open. 40% first, 60% remains. If the second target becomes active, the trader must still watch behavior. If distance shrinks, protect. If reaction speeds up, protect. If price keeps building distance, let the rest work. For a two-step exit, Conservative structure can take 50% first, then 30%, then 20%. Aggressive structure can take 20% first, then 30%, then 50%. But the rule stays the same. Percentages do not fix bad location. Only structure earns the trail. Now compare May 10th Asia and May 11th US. May 10th Asia was wide. It gave both sides. Short from the upper boundary, long from the lower boundary. May 11th US was compressed. It gave a tighter long. The midpoint held. The target was closer. The ratio was smaller. So the behavior changes. Wide box gives rotation. Compressed box gives a sharper decision. But the compressed trade needs cleaner execution. Now connect the higher memory. May 10th Asia lower boundary sat near weekly 0.5. That made the long important. May 11th US formed above that lower pressure and inside the prior rotation. That showed buyers trying to hold the lower half. Then price pushed toward upper memory. So the long had logic. But the trader still had to respect space. If price failed at May 6th US lower boundary, the trade should not be forced. If price reached May 10th Asia upper boundary, profit should be protected. If price rotated again inside the box, no trade would be better. Now the full May 11th US structure is clear. The session forms between May 10th Asia lower boundary and May 10th Asia midpoint. It overlaps the area between May 7th US midpoint and May 7th US upper boundary. It compresses by about 50%. Price holds inside the box. It lifts from the midpoint. It breaks above May 6th US lower boundary. It tests May 10th Asia upper boundary. The long entry sits at May 11th US midpoint. The stop sits at May 7th US lower boundary. The first target sits at May 6th US lower boundary. The trail reaches May 10th Asia upper boundary. Risk-reward ratio 1.66. The trade is not huge. But it is structured. It needs precision. It needs patience. It needs fast protection after the target. The message is simple. The top can short. The bottom can long. The midpoint can trigger. But only when price proves it. Price reaches. It reacts. It holds or fails. Then the trade appears.